No, Joe Terranova got a big week of earnings. We got IBM and OT tonight. I'll have that front and center there. We have Savita from Bank of America, who just took down her earnings expectations and her S&P price target, saying let the cuts begin. I did end on the NASDAQ of my little market read. The NASDAQ up quite nicely, and interest rates at 301 on the 10-year. What do we think? What's most important today?
I heard last week Josh talking about technicals and how technicals was so important in February and March, kind of as a leading indicator in where the market is going to go. I think right now the setup is, with the absence of any Fed speak as they prepare for their meeting, earnings that have been better than expected. Now we rely on the technicals. And here's what the technicals will tell you. If you look specifically towards the NASDAQ, it's reclaimed its 50-day moving average. If we have the chart and can show it, that'd be great. It's reclaimed the 50-day moving average, the first time since April that the NASDAQ has been up above that critical moving average. Now, the S&P is going to follow. S&P 3928 is the 50-day moving average. This is important because quantitative models will move capital back into the market based on that. And I think we're set up here to move a little bit higher as the technicals are suggesting.
Did you see NVIDIA today, Joe?
Okay. Yeah.
Speaking of 50 days, it's right about there. It's up almost 7%.
It is, and I'm very happy about that. And that's why I think the time last week and 10 days ago was the time to be adding towards growth. I think when we look back over the last 10 days, we're going to realize that's not when you want to step away from risk. That's not when you want to sell stocks. It's too late. Now, if we get a bounce in the market, okay, I'm open to selling some stocks because I've said I think the market kind of sways here on either side of 4,000. But when the market moves, market goes back towards 3,600. What are we talking about? Maybe another 5% down. I'm not selling stocks down at that level, right?
You know who's stepping away from risk? Who has been?
Is it Steve Weiss?
Weiss has been stepping away from risk at every turn, right? Are you stepping towards it at all these days, Weiss?
Well, I wouldn't say I've been stepping away. I stepped away earlier in the year. And by the way, Scott, as you know, been dead right on it. And still, virtually every stock I sold is lower than where it is. And I get the opportunity to cherry pick the best names to reposition my portfolio for a completely different environment where capital is not free anymore.
You see how he gets defensive right away when you're trying, we don't.
It's not defensive.
It's defensive right away. I mean,
it's setting the facts.
Nobody suggested that you've been wrong on the market. I just said that you have stepped away, or were stepping away,
ran away
from risk. You, for the most part, you've wanted no part of this market. Let's just be honest. I mean, you haven't wanted any part of this market for a variety of reasons, and you've been right. The question is now, is it time to put your toe back in the water? Do you think that stocks can make a legitimate move higher from here?
So I think it's a tradable bottom right now for the next few days. Midday, I put on some Qs. I still think that's the best thing to do right now, rather than trying to cherry pick individual stocks where you just don't know what the impact's going to be to their earnings revenues. Look, I mean, I was surprised by Goldman today. I'm sure we'll talk about that later. But when you have great CEOs like Brian Cornell having to come out and reset expectations just 2 weeks after they report their earnings, then who am I to second guess them, any CEO, and say, I know better than you what the future is for your company. Not the long-term future, but the near-term future that can very clearly change the equation, whether I want to buy it or not. So, look, in my view, it's going to be, you could see more of a rally depending upon what the Fed says next Wednesday. Now, if they come out and say, hey, take a look at what's happened to commodities, they've gotten crushed, take a look at energy at the pump going down, then you could see it more sustainable. But I don't think that's going to be the end of the story. So I still think the market goes lower because you're going to reset earnings, you're going to reset expectations, and then you're going to have to see what the valuation is. What the market's trading at right now is not a clear picture of valuation.
Okay.
because we don't know what the earnings are going to be. So I'd rather wait. So I stayed long the Qs into today. I'm probably going to stay long a few more days. I may add to something here and there, but by and large, I still think my narratives can be correct.
All right.
And one more thing, Scott.
Oh, my gosh.
I'm not a natural pessimist.
Okay.
Yeah, I'm going to keep going.
Sheesh.
I'm not a natural pessimist. Everybody says
somebody take his
sky's
batteries
full.
out.
Here's what I tell you, Scott. Here's what I'd say, Scott, and then I'll let you get on with the rest of the show.
Thanks.
While we're doing halftime report, I'd be probably doing a sitcom. That's how optimistic I generally am as a person.
Yeah.